Hello everyone, my name is Tushar. So in today's video, I'll be explaining about break-even analysis and how break-even analysis helps in analyzing commercial real estate properties, underwriting those deals. So we will be discussing its meaning, the importance of it, and furthermore, we'll end up with doing a practical break-even analysis on a real estate deal. So the meaning of break-even occupancy levels or the break-even occupancy rate in commercial real estate property is that it is the minimum percentage that need to be rented out for a property to cover its operating expenses. Or in simpler words, I can say that it is the occupancy rate at which the property breaks evens. If the occupancy rate falls below this level, that means the break even levels, then the property will start losing the money. Hence, in order to be profitable, we need at least the break even occupancy level to be profitable in our investment. Hence, it becomes a crucial measure in underwriting the real estate deals. Now we will calculate our break even part in the Excel. So we have commercial real estate deal over here, and we can see that we have some assumptions for the deal. We have the acquisition information, which includes the purchase price, closing dates, and acquisition date of the deal. Then we have the operating matrices, which includes the general vacancy and square footage and the gross potential rent every year. Then we have the loan information of the property. Then in the last, we have the sales information. In the right side of the Excel sheet, we can see that we have a pro forma for 11 years, which includes the gross revenue we'll be earning from the property for all the 11 years. Then we have the vacancy levels. Then thereafter comes the operating expenses. Then after the operating expenses, we have capital expenses reserves, which is kind of expense only that we need to keep aside for any miscellaneous or anything else. So we create a reserve for that. Then we have the debt related expenses, which includes the principal repayment and the interest payment for the loan that we have taken to buy the property. After this, we can calculate our unlevered net cash flows, levered net cash flows. Now we want to calculate the break even levels for this property. So as we have discussed earlier, the break even occupancy rate is the rate at which the occupancy should be, at least we should have, which means at least we should have the break even occupancy level in order to be profitable for in the business. So to calculate it, we can use the formula of absolute, as we have to take the expenses part which in negative. So we will take absolute of operating expense, then we will add our capital expenses reserves in this, and then we will add our debt related expenses in this. We will divide it by our gross potential revenue, which is 570k in our case. Now we can see that we have our break even occupancy level as 75.1%. So it simply means that we should at least have 75.1% of our property occupied by the tenants in order to be no profit no loss situation. If our occupancy rate will fall below this level, below 75% level, then we will be making losses in the property. So thus it becomes a crucial metric to analyze and underwrite the deals. Now to calculate it for the later years, we'll just copy the formula and paste it over the next years. So we'll copy it by Control C, then we will drag it over by Alt ESF and paste it as formulas. Now we have calculated the break-even occupancy levels for the later years as well. So as of now, we have calculated the break-even occupancy levels for the relevant years. Now if we want to take the average of all these occupancy, the break-even occupancy levels, then we can do it simply by using the average formula. So if I'll take the average all these numbers, all the break even occupancy year on year numbers, then I'll get the average occupancy level. So in from this, I am understanding that in the 11 years life of the property, my break even levels are 65.5%. Now, if I want to calculate the maximum break-even occupancy level, then I can simply use the Excel formula of max. So I'll just, in the range, I'll give the break-even levels of year on year. Yeah, so the maximum break-even occupancy is 75.1%, which is in our first year.